Okay, we're a couple minutes early. We should be live. Good evening, everyone. Duck, what's up?
Good evening.
Let's just
Not
see if
much.
everything's working, and then we'll get into it. Hope everyone in the chat has had a good week, or at least has the weekend to help them forget about a shit one. How is ETH down 4%? Have I just slept through this entire move? I just realized on my ticker thing.
Yeah, shit's been moving today.
Yeah.
At least a little bit. But I mean, then again, it's not really surprising given how far we've moved up, right?
Sure. Okay, apparently our stuff is working. So yeah, we'll give it 30 more seconds. Roll through the intros, etc., etc. Flary Roider says audio video good. That's good to know. Dumbo says hello KGB and Duck. Hello. Okay, so this is a weird thing that came into my mind, Duck, right? You got to tell me if I'm being unreasonable.
Okay.
The answer is usually yes, but with the whole KGB thing, which I get every day on Twitter, right? I personally think it's hilarious, and I enjoy the jokes and the spy references, etc. Right?
Mm-hmm.
Famously it was like the kind of the state police, but kind of secret police type of role. It's a descendant of the NKVD from World War II. So it hasn't got a pretty history, right? If my understanding is correct. Can you imagine if, for example, German people were like, "Oh, hello, Gestapo," or something every time they logged into Twitter? Wouldn't it be the same thing technically, or somewhat related? I don't know.
Yeah.
I feel like the KGB thing. Or Stasi, yeah, not the Gestapo, whatever. You know what I mean? Basically, German police in a rough time sort of thing with a rough history. I don't know. Do you think I'm being crazy?
No, I mean that's the thing, right? Whenever you have kind of these historic bad events that everyone knows, no one really likes to talk about those.
Right.
I mean, as Germans, we don't like to talk about it either. And then I don't know. I think the KGB is a little bit less in the forefront, I think.
I think so too.
But
and also, if Hollywood is a strong thing, right? And Russians have been the villains of Western media for literally decades, this obsession post Cold War hangover or whatever. Yeah, so I guess that becomes normalized via media form, right? Bond villains and all that kind of stuff.
Yeah, but then again, the Nazis, same thing, right?
Yeah, but less so in mainstream media now, right?
That is true. Yeah.
Yeah, because Russia's still evil, whereas Germany were like, oh yeah, so conservative, so progressive, and all that type of stuff. Anyway, before we get banned off the platform, I think we should stop this conversation. Peter says that's some strong playing the victim card. Yeah, I suppose it is. No, I'm not complaining. I just think the contrast is interesting, and it just means when the political correctness crowd comes after crypto Twitter and the green frogs and everyone gets banned, I can just play the victim and say, no, look, I was oppressed this whole time. Okay, let's do intros. First of all, to the audience, thank you for hanging out with us this Friday. We've got some stuff to talk about and hopefully answer any questions you may have. I usually have a bunch of notes of stuff that may be relevant, and interestingly, I never share it with the Duck, so it's all left the field for him. Second of all, thank you to Bybit for sponsoring Technical Roundup. Their links can be found in the description below. It's been updated, but I think they've got a Christmas jingle competition coming up. With a 0.01 Bitcoin buy-in, if my memory serves correctly, which sounds like dust, but at current prices, it's not that cheap, right? Not as little as it used to be anyway. We discussed this between ourselves. I might punt it in a very degen-y sort of way, literally go for one trade, all in, do or die. But my personal trading has been pretty shitty recently, if I'm being completely honest. So maybe it'll be a welcome shock to the system to do something like that. What about you? Any interest?
I don't know. I'll see when it gets closer. Right now, I've been just kind of laying back, just taking care of real life things. Not really been trading too much.
Nice. Okay.
So might not get into it.
Yeah. It's okay. I'll lose for both of us. But yeah, if you guys want to check that out, it's a bit of fun doing these competitions. If there's enough interest. Yeah, we can come up with something creative, even though I've got literally nothing on my mind. Lastly, over 12k subs, that's pretty awesome, right? Thank you for your support here. We're not amazing at shilling this channel, but the organic growth, if there is such a thing, has been pretty cool. So thank you very much, and if we want to continue this trend, make sure to like this video so it reaches more people, and we have some more heavy hitting market stuff on Mondays and Wednesdays. Of course, Fridays are for slightly more laid back, open-ended discussion and all that other good stuff. So I thought we'd start, as the title suggests, which I randomly just hit my keyboard and it came up with all the relevant kind of buzzwords for the moment, is we have regulatory changes on the horizon, as we always seem to do, or at least recently, right? The first one, I'm just bringing it up on screen now, is we saw Twitter discuss this a lot. My Congresswoman Rashida Tlaib, I've probably butchered her surname there, so apologies, Congresswoman, if you watch this. But yeah, it's the Stable Act, whose, the intention, if you will, of this piece of legislation is to, as the title suggests, regulate stablecoins. I've seen some interesting commentary that it's actually kind of Libra, or as it's now called, DM oriented. That's the kind of primary purpose of the legislation. And again, this isn't like the law, right? It's just a bill that gets put forward and then it has to pass and there's a whole process and blah, blah, blah. So it's not law at the moment, and bills come up and disappear all the time, right? But it's still, at the very least, an interesting way to assess how legislators are looking at important parts of our ecosystem. Because as I'm sure you'll agree, like, stable coins are absolutely huge for crypto. And without this kind of easy dollarization side of things, I think would be a much smaller industry than we are at the moment. I mean, Tether, it used to be a kind of a more Tether-based monopoly, and now it's a bit more diverse and spread out, which I think is good. But yeah, it just helps to see how, especially in a jurisdiction like the US, and given all the most popular stable coins are dollar denominated or whatever, as opposed to any other currency, it never hurts to see how these people are viewing these things. And I think generally the kind of stuff they're mentioning, these things are largely unsurprising, right? I've always said that if you want to play dollar games, you should expect to play by dollar rules, sort of thing. You can't kind of just voluntarily opt out like that without upsetting regulators. You can't like use their currency or effectively use their currency without playing by the rules. I know there's like XUSD and like all these decentralized anonymous versions of the dollar, but if at the very least you're subscribing to some sort of institutional narrative, it's also understandable that if they're moving, tens, hundreds of millions, etc. in the ecosystem, they probably want some sort of guarantees as to what they're, the integrity or whatever of these stable coins. So yeah, I don't know, this isn't like a huge news, because it's not really news per se, it's like a bill being passed forward, but I think we'll see more of this kind of stuff as crypto becomes professionalized, as seems to be the case with this current trend, and the role of stable coins, both in just generally to moving between crypto and dollar, or even participating in the DeFi ecosystem, whatever it is. I don't think stable coins are going anywhere, so it only makes sense that I think this trend is going to stick around. Because I don't know, I didn't subscribe fully to the idea that it's some big loophole at the moment, but I think we're certainly on the looser side of things from a regulatory point of view. I've gone on for ages there. Have I just said total shit? What do you think?
No, I completely agree. It's basically like you have something. Tether, you had all these Tether conspiracy theories, right? And the reason why you've had them is because it was so hard to kind of judge what was really going on, because there was no information that you could really get. It was all just based on, okay, just gotta trust these guys. And it's still out there, right? People are still saying, okay, Tether is just a fraud, whatever, Tether is not real, it's not real money. The people really say that because, it's impossible to kind of look behind the scenes there. It's obviously going to attract regulatory, views, whatever. You're gonna see more of that, I think, in the future, because it just makes sense, right?
Yeah, I agree. It makes sense.
I can't see a world. Yeah, I can't see a world where it just keeps going, and then the US is just happy with how it's going, and just like, okay, right? You do you. Yeah, it's just not how it works.
Do you think it's bullish or bearish or kind of whatever? It doesn't matter. It's inevitable, one form or another.
It's inevitable, I think. Mm-hmm. I don't think it depends on how it plays out, right? If you get any kind of regulation that fights with the stablecoins, then that's obviously bearish, right? Because a lot of like the infrastructure of crypto is basically riding on stablecoins at this point.
So too.
Used to be Bitcoin. Now it's definitely stablecoins. It's just way easier to move around. People are actually using stablecoins for non-crypto purposes as well. I've seen a lot of stablecoin usage in the poker space. I've seen a lot of stablecoin uses in the betting space in general, just because it's so easy to use and so just hassle-free. And I think, it's just continues to grow, obviously, because it's just a better use dollar in most senses, at least for. So
I find that
we'll see how it turns out, but I think that
I don't think it lends itself well to kind of this is bullish, this is bearish, etc. It's not that type of like hard hitting, price sensitive news sort of thing. I think it's more of a general directional shift over time and a kind of molding of the ecosystem rather than, okay, this came out, they're going to regulate stablecoin, that's it, it's bear. I don't think it's that type of news. I think it's just giving us a preview of what kind of things to expect in the coming weeks, months, years, and that's sort of reasonable.
Peter in the chat said that everything in poker is betting. Poker and betting is used with bitcoins and not with stablecoins. I mean, yes, mainly Bitcoin, but I've seen it happen in the poker and in the betting space, and I'm 100% sure about that. Sorry.
The only other bit was again on the regulatory side of view, less stablecoin specific, and it seems to be more just cryptocurrency, banking, etc. This is a CoinDesk article. The Comptroller of the currency. I probably butchered that. This is such a weird noun. Is it actually pronounced? Is the P silent? Is it just a controller?
Controller.
Controller.
I have no idea.
Controller. Okay, apparently it's controller. I just played it on Google, whatever thing. So this is sort of loops back to, you remember when Brian Armstrong said that whole thing about wallets and sovereignty and all that sort of stuff before the whole Coinbase bad thing? This is super vague, but again, it shows that both the price increase, but also just the so-called institutional, I say so-called, I mean, it's because it doesn't define itself very well, but I guess the increase of professional / institutional involvement in the space, I think that just necessarily brings with it these sorts of headlines, right? Looking at stuff which makes up the core of the ecosystem, like stablecoins, in order to reduce just systemic risk to the financial system more broadly. It just makes sense. This guy spoke about it he says crypto banking clarity in the next 6 to 8 weeks. I find this reading very strange. Saying Brooks seemed to imply the crypto banking clarity coming in the next 6 to 8 weeks would have an positive impact on Bitcoin price. That's weird.
Yeah, that is weird.
That's a very weird sentence.
It's an announcement of an announcement too.
Yeah, exactly. So Brooks is the acting controller of the currency, and then himself saying it may have been a bubble 2 years ago, but with more clarity, institutions see that this is a real thing. Blah blah blah. Adopt at scale, and they've already started to do so. Now that's quite cool, right? I'm not sure I agree with the second part that the regulatory I think he said regulatory clarity are the things that are driving price at this point. I'm not sure that's it per se. I'm not a huge fan of saying price went up because of this sort of thing and attaching after the fact stories to price going up, but I'm not sure regulatory clarity is it. I think one of the more compelling things is the fact that I think the Bitcoin's resilience and how it was so tempting to write it off as a bubble when it goes up and then down a lot. But once it starts going up again, these bubbles, the ones, all the famous comparisons like tulips, everything else, they don't kind of get reborn, right? There's no redemption arc on these things. But by definition, they bubble, they burst, and then they die. So I think every time Bitcoin surpasses an all-time high, especially in this case, a public one, like a really big all-time high, not some obscure, from $5, $20, whatever. I mean like a very retail, mania-driven 20K. Once we start trading at or pass through those levels, I really think there's a second breath type of effect, like, oh shit, this was supposed to be dead, but it isn't, and therefore all the bubble chart comparisons that I made when it was at 3Ks suddenly aren't so valid anymore. What do you think?
Yeah, I mean, it's the Peter Schiff way of arguing, basically, right? It's just saying this is a bubble, it's gonna go down from $1 to 20K, and every time it goes down, you're right. I mean, it's just not how it works. You look like an idiot, yeah. So I agree with you there. It's just the higher it goes, the more serious people are gonna take it, and the more people, like the more bullish people are gonna get, whether that's right or wrong. But yeah, it's just how markets work, right? The higher the price, the more legitimate it is. Like Tesla, for example, if you think about it, like people were making fun of it for the longest time, how overvalued it was, and then it like just absolutely blew the lid off, mega mooned, and suddenly everyone's like, yeah, this is kind of obvious. It's just the future, whatever, and everyone's taking it serious now. So it's kind of, the higher price goes, the more legitimate something seems.
The broader participation or whatever sees that as validation. I agree with that, and I think it works particularly well for Bitcoin. Just higher prices and the whole idea of scarcity, and I don't know. I think a lot of these narratives mesh together really well. What was I going to say? Yeah, speaking of Bitcoin, we've got the minute chart open in a very degen type of way. 19K at the moment. This is the first real kind of something that roughly resembles a range that we've had in a fair bit, right? Even if you look at the consolidations that took place again October, November, those red clusters that we've got in the newsletter, for example, like even those periods, as I think you pointed out on stream, they were all upward slanting, right? It was never really a range. It was just kind of almost just like a rising wedge type of breakout sort of thing. You know what I mean? Like it didn't just actually go sideways. It just went up and a bit slanted and then kept going higher. Yep. Now, this is the first time the momentum hasn't really picked up on the first like 2 red candles or whatever it is, which is literally how it was on the way up, right? You'd have like 1 or 2 down days and then you just break structure entirely. Now we've had like a bigger dump. We've engulfed that origin of that first dump, that move, and kind of, I think, moving sideways right now in a very uncomfortable combination of overly leveraged momentum traders trying to catch the all-time high overextension trade, getting slapped down, and then more sensible dip buyers stepping in at local lows. It's a bit of if you just read Gainsey's feed, he'll tell you all you need to know in terms of trading this range / this chop. But it seems like we've entered slightly less easy conditions for the time being, despite proximity to new highs. Any early thoughts on just where we are right now with Bitcoin?
Yeah, so I mean, what's been happening in the last few days? If you want to screen share,
as always, by the way, feel free.
I can, yeah.
No pressure.
Yeah, always takes a second. Okay. So, I mean, this is the support levels that I have, right? So in general, what's been happening is that every time we've approached the 20K mark, people, like you said, have been trying to kind of play the overextension, which just basically means people on leverage have been trying to get rich off of high leverage, right? And they've done so by using high leverage into all-time high pretty much, and they've been getting wrecked every time they've tried. So for some reason, every time we get close to 20K, you see a lot of people on all sorts of derivatives platforms just completely lose their minds, take on huge gambles with huge leverage into 20K or like 19, 19.3, 19.5, all the way to almost 20K. And they've been slapped down every time. So it's kind of like every time you approach the 20K mark, you kind of see funding go up, you see people position heavily long, and then the rug just gets pulled every time. But one thing to note is that the move down has been kind of getting less severe every time. So, I mean, you can kind of see it here, like that's been a big move down. And then you've had another one here, a little bit less so. And now you've had the recent one, even less so, right? So that's something to note. It's not necessarily bearish when you get that kind of movement, but I would say it's not necessarily bullish either that we're actually like just going sideways. It just means it's probably going to end in chop, and that would be, I think, the best outcome of this all, because you don't really want to get straight up acceleration to the upside again, because then it really starts overextending without having formed the base. And we've all seen what happens when Bitcoin goes up without forming a base. I mean, if you just look back at 20K, you go up, you don't have any base on the entire way up, just straight move up. And then the moment you start actually going down again, it goes swift and it goes really, really hard. So best case scenario for me would be just chopping around this level. You don't want to lose support. I think that would be a danger sign in general. Like losing this support would be the first support gets lost. I mean, it has been the first one and then got reclaimed. And the moment it's lost again, I think there's a good chance it actually rolls over and retests support again. Mm-hmm. So bulls really don't want that, I think, because in the best case scenario, if that level gets taken out, I think we're moving into chop. And then it's just going to be this would be my best case where it just goes sideways through the levels, obliterates everyone. And like you said, Gainsey kind of mentioned this, where he said, yeah, this just sucks to trade. Mm-hmm. And it's a clear change in character if you think about it, right? We've moved up pretty much straight from 10K, and it's been no chop, no nothing, just straight up, no real consolidation. And this is the first time that we've actually seen something like that. And I think the best kind of way to look at it, if you want to see it that is expressed on the chart, is the 3-day chart. It's been literally just green candles all the way up. And then now we've had one red candle that was the big move down. And that's kind of ended just straight up relationship of the market. And I think now it's probably going to consolidate for a while. I could see a consolidation, I could see some chop, I could see a pullback. It's still bullish based on everything, like the high time frames being bullish. Everything's just, I mean, the high time frames are bullish. The low time frames aren't really bearish. It's just, yeah, after such a move, I wouldn't be surprised to see something like that. So, yeah, that's kind of how I'm looking at it. This daily level shouldn't get broken. If it does get broken, best case, chop. Worst case, pullback. And I mean, pullbacks can be pretty significant in a bull market. So, gotta watch out for that. So this is the line in the sand for me, 18.6 roughly.
Yeah, I think I covered something very similar on stream. If anyone was there, I'm sure you'll recall we're dealing with the same kind of cluster consolidation, just viewed from a slightly different lens. We essentially, on the way up, all of these structures have just basically held up. Lowest close, highest close, however you want to define it. They've been acting really well as support and have been unviolated. When we had a break in market structure for the first time here, so I'm just going to take this close. This is the level that we had on stream. And the basic behavior on this Thanksgiving dump was that for the first time we had a violation of daily support. Okay, and so on the rally, that was purely technically speaking a bearish retest. I also mentioned that I had no intention of hedging this, simply given the proximity to all-time high. Right, and this is something we discussed on stream. And what happened since then? Closed above it and closed above the high, and then finding support at what should have been resistance. So again, it's going back to that broken record thing of bearish setups that fail are bullish setups that fail are bearish. In this instance, when we blasted through that level, that was a bearish retest type of scenario failing. That's positive. You got a couple of bounces from the downside or the bottom of that structure, and that's kind of where we are now, and holding like very local support on the daily time frame as well. This looks fine to me. I share the Duck's conclusions that now that we've had essentially this high time frame trap, or what resulted in the trap, the failed breakdown, which makes a higher high, that's a really strong continuation pattern and should provide plenty of fuel as long as the structure remains intact to continue trading higher. As a result, we kind of have to go back full circle. This is now a bullish setup, like a really good trend continuation setup. If it fails, that would be choppy at kind of best, and or short-term bearish at worst, I suppose. So yeah, if bottom boundary of this doesn't hold, similar conclusions, either chop, although I think that chop would probably take price towards the nearest lowest close to 17, or a deeper pullback. But really, given how the trend looks, I share those conclusions as well. Even if this really good bullish setup fails, which would be technically bearish in the short term, I'd still take it on a level-to-level basis, rather than saying, oh my god, the first daily bearish thing on the chart has happened, it's time to target fucking 9k or something, right? I think a measured response kind of makes sense. Don't know if you agree, although
fully agree with you there. I actually think I wouldn't hedge this call was really, really good. Because, I mean, that was like the first real breakdown that we had. So hedging made a lot of sense. But I agree with you. Like whenever you have like these kind of high time frame draws, like an all-time high, and we've kind of taken that out, right?
Yes.
I mean, we hadn't on the first move. We have now on this move. It's not really significantly taken out, but it is kind of like we've made an all-time high on some of the spot exchanges anyway. But yeah, I think in general, something to note whenever you get these kind of things, right? Even though like this looks like a trap right now, and it most certainly is, right? Like as long as we don't lose the support, people down here are all trapped. And these kind of traps, if this is bullish, this shouldn't let those people out again. If it goes back down there, I'd be inclined to think that we're really gonna hurt, like in general, both shorts and longs, just chop or just take a deep pullback, bounce really big, and then just go sideways for a while.
Yeah.
Because what we've now had, trap to the downside, trap to the upside, like you said. So we'd expect the most recent trap to kind of play out, which is these people from down here are kind of screwed.
Yeah.
So yeah, we'll see how that plays out. In general, I think when you get these traps, that's a sign of, okay, this might be slowing down. Like you can't, like if you have relentless buying, right? You can't really set these traps up without getting ran over, right? Let's say you get like a massive pullback, or you try to kind of play this massive pullback in the middle somewhere here, and then you just get run over and you don't get back in, right? So whenever you get these kind of big traps, you usually get some sideways movements, some chop, just based on the fact that, okay, the trend slowed down enough that this can actually happen. Like the bid side has been thinned enough, or we've moved up so much that the bids just haven't been moved back up yet. And I mean, I could see that happen where it just consolidates and then you see new bids creep in and then it keeps going higher. But yeah, I think it's really hard to judge where this is going to go based on the fact that there's not really any high time frame resistance. I mean, I can show you the monthly chart. I mean, what do you want to play there, right? Nothing.
Exactly.
Like there's nothing where you can just say, okay, this is high time frame support, I'm going to short it. If anything, all you can play on like take profit or short side is, okay, I'm looking at momentum and I'm waiting for momentum to slow down, right? And this could be the first sign of that, but really it's kind of like it's super aggressive, I think, just saying, okay, this is going to be the top whatever, based on, okay, we've had one move down. So yeah, for me, I've just kind of said to myself, I'm just going to leave this as is and then just concentrate on other pairs and other stuff that I find easier to trade. Or easier, like even if you want to take profit or hedge, I mean, you can do that on other pairs too. That's what I've been doing. And I think that's easier than just saying, okay, I'm picking the top on Bitcoin here because, yeah,
that's generally an easier bet. And again, like we always talk about, like in the newsletter, for example, it's like, well, the trend is super strong. There's no point trying to short every 100, 500, whatever $1,000 because it's teleporting. So at least wait for red flags to get some sort of evidence of either hedging or to take profit or do whatever fits your risk appetite, right? We had one red flag in this whole time. That one red flag was the daily breakdown, and now that's been technically, while that your green box holds, that no longer applies, right? So the one kind of red flag or reason to assume a trend reversal or deeper pullback, etc., that existed is currently no longer active. So I think we've kind of returned to why on earth are you trying to pick up on this until you. And again, this is like with the monthly chart looking insane, the weekly chart looking insane. Like in the absence of any real historic resistance or just reference points for the market, the least you can do is just look at daily market structure and wait for something to emerge there before basically doing business in kind of no man's land, right? What do you think of the weekly chart? Because yeah, I'm not a fan of like just generally like overextended, momentum slowing, etc. Because Bitcoin can just kind of keep going and these things get eaten up. Does your current view, is that changed by any of the time frames at all, or is it all pretty uniform?
It's pretty uniform, I'd say. Like the thing is, whenever I have a chart like this, and I mean, I've played this, like I've played Bitcoin in 17 a little bit more aggressive. I'm playing it right now. I mean, this was pretty much my entire net worth in Bitcoin. Just watch it go up, right? But whenever it goes crazy like this, I think in general, the obsession of people to catch everything with like huge leverage these days is kind of doing a disservice to a lot of people. Because I mean, a lot of people call the move higher, right? But also a lot of people got completely run over by using too high leverage and then getting stopped out in the process, right? So I think in general, when you have a market move like this, you don't need huge leverage to make good money. So you can just play it slow. I mean, a few of my friends that I've talked with today, they've just been saying, okay, I've just been buying the dip on 2x leverage. And that's been working well. And I think that's a very, very different mindset from trying to catch the exact bottom, high leverage it up, and then become a millionaire overnight. And I think that's what's kind of making this happen, right? These low time frame things where you approach 20K and then people are like, holy shit, I'm getting rich if I just catch this breakout. But what you're doing instead is just throwing away a position that you would otherwise have. So yeah, that's one thing that I'm seeing and that I can't really agree with. Like whenever it goes completely crazy, you don't need to be leveraged to the gills and just try to catch every move. You're just trying to catch the move. I mean, it's easy for me to say. I mean, I've not catched like this. The majority of this up move I haven't played with leverage, so maybe this is just cope. But yeah, I don't know. Like I've seen so many people just complain about having lost it all while being bullish, even though it's just gone straight up. Where I'm like, okay, dude, maybe it's just time to kind of take off some of the leverage, play it. Like if you think this is going to 100K, right? And a lot of people think that way. Why would you risk getting wicked out, losing your entire position on like, let's say you're levering it up, like you're using leverage how it's not supposed to be used, and then you just get wicked out and like you use 20x leverage, you get wicked out on a small wick, and then it goes to 100K and you're fucked, right? So I mean, it's not really the good way to play when you have high targets. But it's
we'll just use
somewhat
options, right?
Yeah,
We'll just use if you want to gamble, not gamble, but if you want to express like high time frame bullishness with much higher price targets, etc., and you want to express that view using futures and just a bunch of leverage and get the biggest position possible now, and you get wicked out, even though you're right, you lose money, which is insane. I think options are significantly more suitable in many cases for people with that kind of view. I don't know.
Yeah, I mean, I'm not a big fan of options just based on the fact that it's like a lot of people treat it as like, okay, this is pretty simple. And just if I'm bullish, I do this. If I'm bearish, I do this. But it's really, really complicated if you do it right. And I mean, the people that make the options, right? I mean, if you're getting an option most of the time anyway, it's like market buying, right? You're just buying it off of someone else, and that person that is providing it to you most of the time knows more than you do.
Yeah,
right?
options flow is crazy. The counterparties there are like galaxy brain compared to futures.
Yeah, so it's like those people have calculated what they're doing, and you're most likely paying on top. But yeah, I agree. Like if you're targeting insane prices,
and if you get wicked out a lot, right? If you get stopped out a lot, that's kind of a big benefit. Is
I mean, the best kind of way to prevent that is just toning it down a little bit, I think.
Some people can't help themselves, Doug. It's not that easy.
That is true. Yeah.
I want to ask you. Sorry, go on.
Yeah, I mean, everyone's kind of struggled with that when they've kind of discovered these leverage trading platforms where they're like, holy shit, I can I put 1 Bitcoin on this and I can trade with 50. What is this magic? But yeah, it's not. You're increasing your risk by more than 50 actually. So yeah.
Yeah, there's a real danger of. I mean, I personally get fucking scared when a market kind of as a whole takes a trade for granted, right? And we've seen that with basically the all-time high momentum continuation trade, right? That just seemed like an absolute no-brainer thing on the table. Why would you, if you didn't sell at 12, 13, 14, 15, 16, 17, 18, like why on earth would you sell at an all-time high, the 20k sort of thing, right?
Yeah.
Absurd. It makes absolutely no sense. As a result, there was almost a consensus trade that, hey, you long the all-time high break momentum continuation, and you use super high leverage because there's no way anyone's going to sell it, and you catch the overextension to 21k, 22k, or God knows where else because it's the all-time high trade. And we've seen that trade just eat shit, right? Or even anything coming close to that trade is people get positioned not after the breakout but into the breakout, so under 20k. Also just derivatives OI getting completely washed on those moves. You can literally see them on your chart there right now. So that's something to be potentially cautious of. Basically, I still think there's no such thing as a free trade or like as a free lunch in most cases. And there's been ample proof of that in what the chart looks like. And again, I know it sounds like a broken record, it sounds really annoying and not as sexy, but if you own Bitcoin and you're not hedged, whatever, you're net long, like you're going to catch the breakout without, if it happens, of course, you're going to catch the breakout without losing your Bitcoin, right? Or without having to risk your Bitcoin. You're catching the move anyway. Yes, maybe less of it, and you could have made more, etc., etc. But if we are in the trend-forming stage of an entirely new cycle, then risking Bitcoin, try to make more on the super early stage just doesn't really make a whole lot of sense, right? Yeah. What I want to ask you about was, given the whole all-time high, that's sort of the thing everyone's focused on, which I am as well, to be fair, totally understandable. We discussed this earlier, looking at a few markets which did break their all-time high. I'm thinking legacy here, but then didn't really follow up maybe in the way we'd expect Bitcoin to. Gold being the primary example, right? So I'm going to bring it up on my screen very quickly, then maybe get your thoughts. Gold had its all-time high breakout in this, quite recently, right? If we look at the monthly chart here, for example, this high goes back to all the way to 2011, right? We can delineate the highest close here. And we had a very strong monthly breakout through all-time high. Like, you probably couldn't make the market look any stronger than with the monthly close, that July candle that I'm looking at.
Yep.
And then you even had a kind of, it looks kind of shitty, right? But technically a retest type of candle which closed above the level. And all that's happened since then was that the all-time high break has seemingly turned into an overextension, deviation, whatever on earth you want to call it, right? We're now back below the level and even broke local market structure by making a lower low. That's probably resistance now, etc., etc. So kind of in a similar vein, the easy continuation trade, like, especially look at the preceding trend. That's what makes this brutal, right? Especially for like gold. I know this is the weekly chart, so it's not as indicative, but it kind of just went up in a straight line, right? Went up in a straight line, blasts through all-time high, tested a support, and then you get this kind of more brutal-looking pullback, even though it'd be almost easier for the market to continue off of that level as opposed to dip below it. What do you think of those sorts of all-time high failure trades? Do you think it could / may apply to Bitcoin, or just any reactions?
Yeah, I could see that happen to Bitcoin as well, but it's pretty hard to judge. I think like Bitcoin's just moving. Like, if you look at the Bitcoin weekly chart, it's kind of like looking at the gold monthly chart, right? It's like Bitcoin's moving much faster, but it's pretty similar in what it's done, where it's just been a straight run to the all-time high from pretty much a relatively, if you disregard the one from a relatively stable rate. I could see it play out similarly.
You're kind of roboting out.
Kind of what I'm...
Oh, really? You're going full dial-up internet for a second. Try again.
Shit. Yeah, so I could see the same thing happen for Bitcoin. I think it would play out faster than gold, just because Bitcoin just generally plays out faster. Um, but yeah, this is just sadness. Like, just looking at that chart, it's just sad. But then again, like, I'm not really the biggest fan of gold. Like, if I want to get something that is like gold, I'm gonna get Bitcoin.
Yeah.
Just makes more sense to me. I think, and I know a lot of people will disagree with me on this one, but I just think, like, in general, why it just kind of feels like the outdated version of Bitcoin. So I can see why people would kind of move a little bit of their gold exposure to Bitcoin now that it's starting to rally, and then give that a little bit more fuel to the downside. But I'm really not a gold trader. I've just been like really bullish based on this range, and it broke to the upside. And now, like, looking at that chart, that's pretty much impossible to trade, I think. I mean, you can play support resistances, but kind of judging where this is gonna go, really, really hard, I think. Just based on the fact you get a fake out above the all-time high, and then you'd think it, like, if it does pull back, it dumps really hard. And what it's done this month is just like bounce from support. So I don't know. It's just really hard to judge where this is gonna go.
Yeah. No, I agree. It's nice to see technicals working so well, though, even just with the most straightforward levels, right? It's just where what the market's tapped, where it's gone. I mean, I can at least appreciate that from a zoomed out point of view. I was gonna also ask. We talk Bitcoin, talk gold. I want to ask about like ETH, altcoins, etc. Right?
Mm-hmm.
So there's the argument that for new entrants in the ecosystem, Bitcoin is kind of the gateway drug, right? Even though it's slightly less so now, given the how you can participate in a kind of almost just stablecoin oriented manner. We've also discussed how for most people, you still get into Bitcoin, then you discover everything else, right? You don't just go stablecoin, altcoins, and kind of skip Bitcoin. I don't think we're at that stage. I don't think we ever will be at that stage. I still think it's the rite of passage almost. Nonetheless, there is that relationship, right? You enter crypto, be it through Bitcoin most likely or not in those rare few cases, and then because one Bitcoin is worth so much, you obviously buy stuff that's cheaper and that moves a lot more and, dumps harder, bounces harder, looking for the new Bitcoin, which is, I think people forget how much of a big narrative that was in 2017, right? Yeah. It wasn't like Bitcoin, I don't know, complementary to Bitcoin, or DeFi, which is like something different and a different value proposition. Like, straight up, a lot of the 2017 shitcoins were proffering to be better Bitcoin or Bitcoin replacements, which is insane, but that was the narrative at the time. So given that relationship between Bitcoin and ETH, obviously looking at ETH BTC and altcoins generally is interesting to me. From a purely technical point of view, you can see I've got a few levels here. My view is that, we found resistance at the top of like a massive range. This whole consolidation after that relationship topped out, then you had the lower low, etc. And we basically retested the top of the range or resistance at around 36s, right? That worked very nicely. And then we bounced, I think, off of an equally important area, which is where we had the first weekly shift in market structure. That significant, high, lower high weekly, etc. Then higher weekly, really huge impulsive move. And that's where we found support as well. So for a bullish ETH BTC, where the chart is right now for me is technically retesting broken support turned to resistance, close to 31s, 32s. But if we're looking at from a casual Friday big picture point of view, any break of resistance or breakout from this range, and I think if we tap it again, I don't think this holds as resistance, right? I think it's either the bearish retest here, or I wouldn't be comfortable being a seller at the top of the range for like the 5th time or whatever it is. You can see there's a lot of space between like a high time frame breakout in ETH BTC and the next kind of plausible area of resistance, kind of at 0.05, right? I think that's like a 50% move. It's like a 50% move taken from the old high to the next area, which would make sense from a technical point of view. So I kind of want to get your take on ETH BTC, what it would mean for altcoins, and maybe what kind of Bitcoin has to do to facilitate this sort of a move.
Yeah, ETH, for me, I'm kind of looking at the monthly chart.
Also, give me 30 seconds and entertain the chat.
Yeah. So for me, for ETH, I'm looking at a monthly chart just because it's the cleanest so far. We've bounced from support, rally into resistance, and now we're kind of chilling in that resistance. I wouldn't be too bearish just based on the fact that the trend's been up, right? And we've kind of hit the monthly support level that needed to hold, and it has held so far. But I prefer being bullish above this level just based on the fact that, I mean, this is the biggest resistance that we're going to struggle with. Just based on the fact that this has been tested multiple times, this level. In crypto and in general in markets, the levels that have been tested a bunch of times don't tend to hold too long. Like if you go back up here, even if we pull back down, it's probably going to break out to at least the next resistance, right? So for me, I'm kind of looking at this resistance. I want to see Bitcoin show strength through it. And if it, ETH shows strength through it. And if it does, I think there's a good chance that it actually plays out bullish. And I mean, the moment it does break out here and puts in like a nice green candle, right? Goes like up here or something, then you're going to see all the people on Twitter start talking, and not only on Twitter, pretty much everywhere, starting to talk about the inverse head and shoulder possibility.
The flippening, I think, at that point, right?
Coming in?
That would be the kind of the flippening point.
Yeah. And then you sell the next resistance, because the moment people talk about flipping anything, if someone talks about XRP flipping Bitcoin, get out of the market. That's the best exit signal that you're ever going to get.
That's quite good.
I mean, that's been, for me, like one of the main criteria for in 17 for getting out was I saw XRP approaching Bitcoin market cap, and then like the fully diluted XRP market cap actually surpassed the Bitcoin market cap. I was like, yeah, okay, this is just getting completely ridiculous.
Yeah, didn't Brad become like one of the richest people in the world at some point, or something ridiculous like that?
Yeah, very close to it anyway. Yeah, and then like that is the madness that it can go to if you actually get a bull run on the altcoins. We're not quite there yet. In general, I think like the old coins in general haven't been showing too much strength. And I'm not surprised by that, given the fact that Bitcoin's just been completely like rallying like mad. And when you have Bitcoin show strength like that, it's obviously really, really hard for the altcoins to keep up. And I mean, just simply keeping up with Bitcoin is a tall order. And I think ETH's done that really well.
Yeah,
I was very surprised by that. But most of the other altcoins haven't. Like there's a bunch of altcoins that are still worth the exact same which they were half a year or a year ago, while Bitcoin's at all-time high, right? So while Bitcoin keeps going up like this, I don't think there's much reason to exchange Bitcoin for altcoins. Just doesn't make sense, right? Whenever you're buying an altcoin, you're basically saying, okay, I'm taking Bitcoin, even if you're buying a USD pair, but because like really would you, like if you're not buying the altcoin, you're probably buying Bitcoin with it, right? So even if you're buying a USD pair, it's kind of like you cheating yourself, telling yourself that you're not exchanging your Bitcoin for an altcoin. But yeah, you're basically exchanging an altcoin, your Bitcoin for an altcoin. And when Bitcoin's just mega rallying, that's just basically selling strength.
Yeah. And, or you're assuming you can outperform something which looks mega strong, right? And that's even assuming you're directionally correct without getting stopped out, etc., etc. All of that kind of stuff.
So I mean, there's more risk in it. It's harder to do, but I mean, a bunch of people have been playing the altcoins, and I think if you're playing level to level, or if you're playing like low time frame momentum, I think that's completely fine to do.
Good.
But a lot of people have lost track of the higher time frames, I think, because like, I mean, you're looking at this, right? And you're wondering why you see so much people talking about altcoins, right? Because really, when it's looking like this, there shouldn't be too much talk about altcoins, and there should be a lot of talk about Bitcoin, which is at all-time high, right?
You need the DeFi pairs, bro. They look better.
Yeah, that is true. But then again, like I I've gotten so many angry comments and DMs and whatever.
I mean, your Twitter's even if you look, Duck, we know that, right?
But yeah, I mean, even if you're looking at Link, right, the poster child of strength of altcoins, right? It's gone up straight the entirety of the altcoin bear market. This is showing massive, massive weakness, in my opinion. And I mean, for me, it's been relatively easy to kind of see, okay, I'm not entirely sure where Bitcoin's going to go, but I know that Bitcoin's probably going to outperform Link, for example. That's been my thesis. And I think like for a lot of these coins, when you see them, depends on where they are on their cycle, right? When you have a coin that goes like this, and it's currently at the cycle low, I would not necessarily feel safe saying, okay, this is going to go down, right? Because, technically it's at support. Generally speaking, cryptos like to bounce from cycle lows. It's just how it works. And
would you buy
that
this?
Is a very different. It's a very different story from this, right? Where you're not at the cycle low, you might be at the cycle high, right? And that's kind of how I've been treating Link, for example, where I'm just like, okay, I think this is probably going to get outperformed by pretty much anything in the space. So even if I'm bullish altcoins, I'd be thinking, okay, this has done its cycle, so I'm just going to play it like that, and then buy maybe a little bit of one of an altcoin, and then sell a little bit more, or like sell a little bit less of Link, like just to hedge the other position. Obviously can get really dangerous real fast if Link starts to squeeze. But so far, I mean, you're still seeing funding positive. You're still seeing everything kind of in the favor of bears, given the fact that it's actually broken support. So yeah, what I've been doing, and I think what a lot of people kind of miss, is that you can be relatively neutral the market, but you can kind of look for weakness and strength, right? And the strength is very clearly in Bitcoin, and the weakness is very clearly in the majority of the altcoins, right? So what you can do is bet on the strength and then bet against the weakness, like say, okay, these things have been weak, so they're probably gonna continue to be weak. Because if you're not saying that, you're basically saying, okay, this is gonna do a trend change, right? And so far, there's not been an indication for that. So that's how I've been playing this, kind of trying to stay relatively neutral on leverage positions, and then just abusing the fact when something is weak and abusing the fact when something is strong. And I don't know, it's kind of makes a lot of sense, but I don't see much people talk about it. It's a little bit more complicated than just pressing green and red, but it's pretty rewarding so far anyway.
Yeah, Link BTC is a really interesting one because we've been tracking it in Technical Roundup for a while now as well. And this really looks like, assuming continuation, the first real high time frame support break in Link basically ever, right? If we're looking at kind of weekly trend, etc., those sorts of levels, it's been like literally the strongest trend, especially given the basically the secular bear market that the alts were going through, right? Link just did not care. I mean, that weekly chart is absolutely insane. At the moment, and again, this is always subject to change, etc., and you yourself outlined the squeeze risks. Viewers of the channel will be familiar with, again, the impulse, consolidate, impulse type of structure. Especially in a strong trend, you have to deal with the consolidation as your support resistance structure, and that itself is a range, right? And so it's been that's what I like about Link. Even if it's kind of counter trend or moving in a trend reversing sort of way, whatever, it still respects the levels really nicely. You know, it doesn't just kind of rug pull. It doesn't rug pull, right? It keeps using support resistance. And at the moment, we had like the weekly close kind of below the structure, currently retesting as resistance. I think the next big level of support is down at 50s, right? The macro kind of range, you know, the last meaningful longer term consolidation, because this is like literally like 2-3 weeks, whereas here we spent a couple months prior to the all-time high break. It is important, as you say, to kind of disclaim, though, if this turns into some sort of trap, where the lower boundary that gets reclaimed or has like a really long wick and whatever starts looking bullish, that in itself ends up being like a really great trap setup that, especially I know this because I've lost money on these trades so many times, where I'm looking that there's so much space between support that looks to be broken and the next level of support. I'm like, oh my god, I can't wait to capture this move. It looks like free money, like 30, 40, 50% down unleveraged, and then I end up getting too aggressive at the level itself before I get any strong whatever confirmation or evidence of the position being correct, and then that ends up being the wick before we kind of re-enter the range, and then it goes higher, even if it is to form a lower high somewhere down the line. So that's the only word of caution, just based on personal experience, that I think is worth being aware of. If you find yourself maybe prematurely salivating at the amount of space between a support which looks cooked and the next level, just make sure you don't get trapped or, be a bit weary with the trade management side of things there.
I mean, in general, like if you're looking at it right now, it's already almost down 60%, right?
Yeah.
So it's very easy for me to say, okay, yeah, I'm bearish this, because I've been short Link for quite a while now, right? So I've been sitting in this position in Bitcoin terms anyway. I've shorted it against USD. So, not quite as much as I would be if there was any kind of good chain link Bitcoin pair to trade. But yeah, I've been doing this from high, so I wouldn't feel necessarily comfortable just shorting this support break and then just hoping that it sticks. That could happen. It's a support break; it's a significant one, but I wouldn't just blindly short just because it's broken. In general, what I look for when I short any market, really, like shorting is always something where you have to be more careful than longing. Most markets tend to go up. If you're looking at the altcoins, you would think, oh, that's not true. But in general, like most markets tend to just like to go up. Otherwise, no one trades them, right? If a market just continuously goes down, it's not going to be traded, right? So you don't want to be forever short, and you don't want to be just like bearish everything. So it always has to have an invalidation. It always has to kind of have a time component to it as well. Where if it doesn't play out in a certain amount of time, you just don't want to be in it. Because most people.
An example of that, by the way. So go on, finish. Yeah, sorry.
Yeah, no.
Most people.
Go ahead.
Mm-hmm. No, sorry, you were saying most people.
Yeah, okay. So most people kind of tend to see, okay, I'm up a little bit on this, so I'm just gonna put like a stop loss break even or whatever. And it's funny that I say that because I'm right now in that trade and my stop loss pretty much break even. But what happens is you're up a little bit on the trade and it goes sideways, and you're just too stubborn to get out because you see the gains. Like whenever I get into a trade and it just starts going sideways and starts chopping up around my entry, if it's not a high time frame based trade, and if it's not kind of a macro view that I have, I tend to just try to get out, because it's clearly that I've timed it wrong, at least on a short, right? On a long, if it goes down and it just chops, that I think has more chances of going up than something where you're like, it goes up and then you short and then it starts going sideways. Because in those cases, more often than not, at least in the crypto space, you get at least a spike up and then down, where you're like, okay, you probably had to stop somewhere here, you get stopped out, that kind of deal. So most of the time when you have this kind of formation where it just starts going sideways at your entry, you would get a better entry higher up. And so in this case, if this didn't just completely dump off the face of the earth, I wouldn't have kept it. But so far it's been, it's just been straight down, basically. It's a slow move down comparison to the move up. But that makes me hopeful that, kind of sucks to say hopeful about being of something going down, but that makes me hopeful that this actually has the capitulation still in it. And I could see that happen if Bitcoin goes above 20K. That would probably stop me out on the Link USD portion of the trade, but that isn't really too terrible because I'm seeing this as kind of a risk, at least as a less risk kind of hedge. So I'm very happy to see Bitcoin go above 2021. And if that stops me out of my Link USD trade, I'd be fine with it because I've just taken a bunch of risk off of my Bitcoin. and put it on this. So I don't know if that makes any sense, but I think you're getting what I'm saying, right?
That makes sense to me. Makes sense to me. You made a point about time-based invalidation. I think ETH USD has like one of the best examples of that on the weekly time frame. That big bearish retest that took place. So after we had timing is everything. You know, I always keep joking. Although I enjoy when I make the jokes. Most people make that joke at me. They're like, you know, good news, I longed Bitcoin at like 12k and ETH at 390. Bad news, I did it in whatever the house top was. So yeah, timing's everything. But yeah, it was this bearish retest in ETH where we had the big move up, that monthly 400 level support resistance flip. We dipped. I was buying this dip off of a monthly level, which looked really good, and then it nuked with this weekly engulfing, whatever. And then the lower boundary of that pre-nuke consolidation was a kind of nice support resistance. And this is like a really good example of the bearish retest not doing shit, right? So you have the impulsive move down, you have 1 week of retest, another week of retest, which spikes previous week's high, and then the market just does absolutely nothing for a month and actually starts creeping higher. Which is, I mean, you know, if you short like the first retest, right? Let's say even on the weekly close, whatever, you've got like you've got like a month of the market just absolutely not moving after what should have been, if your idea was correct, a trend forming candle, right? Yep. And this is the thing about crypto. Trend forming bearish candles don't stick around, right? If there's one thing I learned, again, there's more than one thing because I just fucking lose so much. But another one of the things I've learned is that bearish trend forming candles don't stick around, right? If you look at there's some hindsight selection bias here, whatever, but look at how the tops look, certainly on the weekly time frame, right? Once it happens, that shit nukes straight up and it just keeps going. And if it doesn't, then it's not a trend forming candle, you know? So kind of slow bearishness on the weekly time frame, etc., just isn't a thing. And if it is, you might be on the wrong side, I think.
Yeah, most of the time anyway.
Yeah.
And I mean, that's the thing, right? If it's most of the time wrong, why are you betting that it's going to be different this time? Because, I mean, that's just a bad bet to take most of the time anyway. Yeah. I mean, I was looking at ETH and I was actually shorting that retest. Mm-hmm. And then just it kind of gapped down. I traded this a lot, actually, on the lower time frames. For my kind of trading style anyway. So what I did was I was just trading this where ETH went down and Bitcoin went up. It's the kind of same thing that I did, like that I'm doing right now with Link, where Bitcoin's going up and an altcoin is going down, right? And then I was like, okay, this is weakness right now. So I'm going to play it as weakness while kind of not putting any shorts, not putting any hedges on Bitcoin.
Yeah.
And then it went down. And the moment it stopped me out, right? And I took a couple trades during these few days. The moment it stopped me out the first time, which was basically this candle, I was just like, okay, now it's done. Now I'm not going to do it again, like anymore, because I mean, the general market is going up, so it doesn't really make sense to be super aggressive, right? Yeah. And I think it's the same kind of system and the same kind of reasoning that I'm using for my Link trade right now. It's the same idea. You're seeing weakness on this pair in comparison to Bitcoin, and I'm gonna play this until it stops working. And I think like this was my entry basically 15.3, and then I moved my stop to 15.3 because it shouldn't really revisit there. And I'm gonna move it lower down here again, somewhere in that area. And then if it does like another leg down, I'm going to move it down again, right? I don't want to be forever stuck in this short position, even more so because it's already taken quite a while. But then again, I don't want to get out of it before I'm invalidated, and that's not happened yet. So it's kind of how I'm playing it, this kind of strength and weakness thing where it's very clear Link has been going like down ever since 15. And it's very obvious that Bitcoin's gone up since then. Mm-hmm, mm-hmm. So
it makes sense to me, right? Basically, to like reduce exposure in some way instead of selling the strong pair. It's kind of just capitalize on the weakness of a weak pair.
Yeah, kind of and I mean, in the end, it's the same thing, right?
Yeah, exactly. That's understandable to me. One thing which you reminded me of in ETH, I made a lot of mistakes on this run up. thankfully, I haven't been just blind shorting on the way up. Nothing like that, right? But mistakes are always relative to what a person's normal standard is or what they're used to. So I caught very little of the high time frame moves on leverage. I played with leverage using the same trade ideas earlier on, but those were wrong / too early. And then on the way up, the only real management I did was sell some spot Bitcoin at 15.2, which is fine. I mean, it went higher. It's okay. I was talking to Loom about this, which was the funny part, that when I sold 15.2 spot, a chunk of spot, not the whole bloody thing, because I'd be probably miserable right now, right? But, I locked in some, because I wasn't in leverage longs, but I want to, take something from the market, right? So I can't close a leverage long because I wasn't in one. So I kind of closed the spot long, if that makes sense, right? So I sold some spot. And I told Loomdar, I was like, when at that 15K mark, I was, my mental euphoria was so high, right? I was like, oh my God, this is the fucking craziest thing ever. I need to kind of control myself and, regain some balance or whatever. And it was psychological, which for me is historically a very good indicator and not something I ignore. The funny thing is, at 18K, I started feeling like the euphoria in my body, like the actual, like an actual fucking tingling in the body as opposed to the brain. I was like, that's the one I should have waited for, not the purely psychological one. That's just like an anecdote, which I thought might be entertaining. Yeah. But on the more technical side with ETH, I did a grave mistake, like something which I should never ever do, and I generally recommend people don't do unless the circumstances call for it, is I doubted my own levels to cope. Which is fucking insane. You should never do that. Even if your level selection is quote-unquote wrong, especially on a high time frame, you just stick to it and trade off of what you plan to trade off of as opposed to what suddenly and conveniently makes more sense after the fact, right? So for me, there's even videos on Technical Roundup and, the pre-recorded ones and live streams, etc. That I had this consolidation on ETH. It was either this one or the highest close, lowest close. It doesn't really matter, right? It's kind of the same. Basically, the weeks of trading that we had preceding the big weekly nuke down, right? And the whole time was this should be mega resistance, bearish retest the bottom of it. Newsletter was bullish actually when it reclaimed the bottom side of that, which is a nice catch. But technically, this weekly close should have been the full bull signal straight ahead, right? Because no matter whether I'm using this weekly highest close as resistance or this weekly close as highest resistance, the idea was you had a consolidation, right? You had a consolidation which preceded a big nuke, and that should be resistance. The second that consolidation is no longer resistance, that's a strong sign of reversal. It's the same thing that I keep repeating. A good bearish setup that fails is bullish. Now, what I did, instead of just simply saying, okay, highest close, that's been broken by a weekly engulfing candle, absolutely full send, there's no resistance, my dumbass went all the way back to 2017, right? And I was like, hey, hold up. Maybe I'm wrong, and maybe this is the resistance, right? This all-time high consolidation cluster, this thing here, and maybe this is the one which I should look out for and look to sell into, etc. And I got happy in the short term because we pinged the micro high was put in at the top of that structure, and you had a weekly close which looked like it was respecting resistance. I was like, aha, I didn't fall for the bull trap, and now I can technically look for short setups, etc. And then the rest was history, because look at that fucking weekly candle that followed, right? So that's really annoying for me, the fact that I had such a clear idea with this weekly cluster. So I took a trade up here, but it was long and it was too early. I longed 393, got out 387. And then when the idea actually triggered, I was looking at something else. Just fucking amateur hour. Do you know what I mean?
I mean, that happens to everyone. I mean, if we want to talk about mistakes, like my biggest mistake this year was seeing this candle here, this monthly candle, and it's not just going full bull tide.
Yeah.
I mean, it's just like, this is the best kind of setup that you can get. Just basically wipe the entire stop losses. It's always easy to say in hindsight, obviously. But yeah, I should have flipped the switch and went completely bull hard there. Didn't. That cost me a lot of profits that I could have made. But yeah, shit happens, right? And learn from your mistakes, hopefully. And I do too, hopefully.
Yeah.
But yeah, that was something else. And then at least I kind of learned from my mistake at 10K, right? I was like, I can see this pullback quite big based on the kind of size that it's already put up. Like this kind of move's already been massive. And so this monthly close, like I'm not gonna fall for this again. I'm not gonna fall for this again because this is the exact same thing as this. And I was like, no, it's not gonna happen again. It's happened once. It's not gonna happen again. And at least something, right? And now we'll see what happens next. The thing is, like, no, it's not going to be as easy as this anymore because, like, I mean, it does seem easy in hindsight. It obviously wasn't back then, but now we don't have a support or resistance anywhere close. Like, let's say the monthly goes to 14K. Do you really want to long this if it does go to 14K this month, other than a wick? I mean, it closed 14K. I wouldn't really want to long. A wick, I definitely would. But otherwise, like, other than that, like, now it's going to be harder to trade based on the fact that we're in the middle of nowhere. And when you're in the middle of nowhere, right, the only kind of tools that you have available, at least for me, is kind of looking at momentum, kind of looking at sentiment. But sentiment is really hard when you have MicroStrategy just buying a bunch.
Sure.
And other companies, like, I mean, that was basically what made this bottom at 10K. And I mean, it's really hard to judge sentiment if you just have like some big players FOMOing in, right? But you have sentiment, you have momentum, which I think is better in this case. And then you just sometimes have to let it rip and see where it goes.
Yeah, I think lower time frame market structure will probably be one of the things I'm looking at as well. Like even on the 2017 run, it was good enough. There was something, right? If you're a high time frame trader and you don't have levels, I mean, that obviously sucks. And that's actually, that funny anecdote I tell all the time. I was this close to quitting trading or learning how to trade in 2017 because everything was going straight up and I was learning how to trade levels. And I'm like, this methodology is bullshit. There are no levels. They're just straight lines. But yeah, I agree with you that the toolkit has to change when you're dealing with when historic levels are completely irrelevant or just too far from price. And I just think you can use generally similar type of stuff, but just on much more condensed timeframes, I guess, is a decent starting point. Maybe we can just catch on to whatever the next sexy, trendy thing is, get some EMA cluster type of thing and look really cool for the stream. Who knows, right?
I mean, that's how it worked in 17. You just copied whatever was most popular because that
and everything
tended to work.
Like, wow, this guy's fib extensions are really sick. It's like, well, the whole market just tripled, so I guess they are really sick. Well done.
Yeah, I mean, if everything goes up, it's not really too hard to be right.
But some people, you know who I'm referring to, some people really built a lot of technical clout and gravitas based on TA methodologies whose like method was bullshit, but whose conclusion was correct, at least at that point in the market cycle. So that's an amazing example of like, false premise, accurate conclusion, and then you fall for the method, which ends up screwing you. There's a lot of stuff like that. I agree with Richard in the chat who says, don't the levels just become much more local as opposed to long-term in these circumstances? Yeah, I think intraday and daily levels of market structure will probably be the name of the game. Yeah. And often that's the name of the game when you're between high time frame levels as well, right? Like, I know it's slightly different when you've got like nothing versus you're between A and B, but the same logic is still kind of applicable that there's no high time frame stuff here, so I'm going to have to jump down a couple time frames to figure out what's up. I'm pretty open-minded towards that. It's a good problem to have. Let's just say that much, right?
that is true. Yeah. I mean, the thing is, like, when you have something go straight up, for example, Bitcoin, right? Now on the daily chart, when you have something go straight up, you can use old levels. You can use like these kind of support boxes, and they've done really well actually. Like if you look back on it, sure. Like this was really nice. But you're gonna have to be a little bit patient, right? For example, this one you broke out. And you could be like, oh, this should retest the breakout or whatever up here, and it doesn't. And it goes up and up and up, and you're like, oh, shit, I missed it. And then at some point, it just does one straight candle into your support, and then you might not be there, or you might not have bits there. Yeah. When it goes completely crazy, you're just going to have, like, sometimes you're just going to have to trust what you draw. Oftentimes, you don't have enough time to kind of just jump into at market if you're not at the computer like 24/7. Yeah. But in general, I think in these kind of circumstances, right? And this is kind of circling back to what I said earlier. When you have the market go straight up, right? Back then, BitMEX wasn't really a thing. High leverage wasn't really a thing. I mean, a few people used it, obviously, but not too many. Bitfinex was actually the name of the game, which for the people that are unfamiliar with it, allowed ×3 leverage, and that was it, right? And that was still more than enough to make a shitload of money trading this. And nowadays, if you go to a new trader or people that have kind of ignited their trading career this year, if you're telling them that they can only use 3x leverage, you're like, holy, what are you doing? It's not enough, right? But I mean, it's more than enough. It's just you're kind of reducing the risk of ruin in a bull market. Too many people in this 17, even on 3x leverage, lose too much and then miss out the entire rally just because they risked it all on making a shitload of money when they didn't really have to. You can just ride the trend. And in this case, it's the same here. But you don't really have to kind of catch everything as long as you kind of catch some of the move or the majority of the move. At the very least,
don't just lose everything shorting, right? The net long meme, it's actually underrated in my opinion, because you are technically catching the move that's available. Now, are you catching more of it than what's available by having additional exposure, like literally longing your longs, right? Taking leveraged exposure on top of your spot exposure. Like, if you're not doing that, I mean, yes, technically you're leaving stuff on the table, but you're still worlds better than people losing their Bitcoin as it's going up because they're trying to short type of thing, right? I mean, Jesus.
Yeah.
And a lot of people got wrecked that way. And look, even in the Bitcoin bull market, people still end up wrecked. At the end of it or in the middle of it, whatever. Like altcoins, they have a very mixed history for a lot of people. Like a lot of, people who caught a lot of the Bitcoin move in 2017 literally lost their entire fortune on altcoins by just holding 90-odd% drawdowns in 2018 and onwards. So there's never a free lunch sort of thing. I'd say the only kind of equivalent or closest thing we have to the free lunch is when you actually pay yourself fiat in your bank account that counts as a legal tender in your jurisdiction or whatever, right? That's when you've actually made money in the market, so to speak, in my opinion. Anyway.
Yeah. I mean, the crazy part about it all, right? If you imagine that happened back then where you couldn't trade altcoins and leverage, and now you can, and now people are trading altcoins and leverage on high leverage as well, which I just see as problematic. Because if you're trading an altcoin, you're already leveraging basically Bitcoin, right? Let's say you're trading any of these altcoins, and like, okay, this is gonna go up. If you're right and it goes up, it's gonna go up higher than Bitcoin does, right? I mean, you're taking on more risk by buying an altcoin. The reward should be higher as well, and usually is the same. Like, it's just higher reward, higher risk. If you're now just like, okay, I'm just gonna high leverage this altcoin, then you're obviously risking multiples of if you just high leverage Bitcoin, which is already dangerous, right? So I think there's something where a lot of people need to kind of look at themselves and see what they're doing, because that usually doesn't end well, in my experience anyway. I've seen a lot of people, and I have a few real life friends that have been holding altcoins from all the way in 17 to now, right? And they're basically break even on those, like in USD terms anyway, like not on the altcoins, but like on the entire portfolio, which is kind of sad to think about, because they bought it like 9, 10, 11, 12K Bitcoin and then added altcoins and then now break even, including Bitcoin. But they're break even, right? They're not completely out of the game. And then if you think about it, like what would have happened if they just went into altcoins with leverage? They wouldn't have anything left. Yeah. So I think there's a good kind of reason why like a lot of the older time folks in the market just trade unleveraged altcoins and kind of keep the leverage for Bitcoin to kind of reduce counterparty risk. It's obviously your choice, whatever you do. And if you want to get like super rich, super fast, just risk it all on the trade. That's completely fine by me, right? I don't want to stand in the way of that.
Don't let your dreams be dreams. Yeah.
I just want to give a warning, because what you're basically doing is you're kind of adding leverage on top. Like if you leverage on an altcoin, you're multiple times leverage that on Bitcoin. Just based on the fact that if anyone really wanted to kind of screw you over, they could. And if the exchange that isn't nice, if the exchange that you're trading on isn't nice to you, like Bybit, for example, has been really nice to people, where if something happens, they've been reimbursing. I've seen that on ETH in the last few days. But if there's a bunch of exchanges that don't do that, and they don't really have to do it, and it doesn't really have to be only 1 week. It could happen whenever. So I mean, you're kind of taking on a lot of risk, and I think that should be spoken about more, because sometimes what you see on Twitter is a person just have 15 altcoin longs at the same time. And then they're like, yeah, my liquidation is so far away. But what they don't realize is that all these altcoin longs are on cross leverage. So if one of them goes down, the liquidation price actually goes up. So you actually get liquidated much, much earlier than you think, just based on the fact that all of these, the moment they move down, your liquidation actually gets worse and worse. And then you just get completely messed up. So, yeah.
I mean, it's crazy, right? We've seen people just eat shit on the what's supposed to be safer spot altcoin Bitcoin trading, and now you introduce thinner books, high leverage, futures type of shit, and then I mean, it's not exactly a superior risk profile or whatever. But you can move the slider up, so that's good. No, look, I mean,
everyone can do it, right?
At all. I think
if you want to do it,
as long as you're aware of what the trade-offs are and being able to contextualize it relative to just holding Bitcoin, for example, then I think it makes as long as it makes sense in your system to do so. Look, who the fuck are we to tell you not to? But a lot of people almost see it as a necessity. They need to be trading Bitcoin on leverage and altcoins on leverage and taking advantage of all the futures contracts, that type of stuff. And it's not always the case, especially when Bitcoin is in a trending environment, right? It's not like Bitcoin's just been moving sideways for the 6K range before the breakdown for weeks, months, whatever. And you're like, shit, man, I need to capture something in this market, right? If the market's doing your job for you, then enjoy the good times while they're there, and compound where possible, and take the easier plays rather than making things more difficult. That's how I view these things anyway. But I'm also a shit altcoin trader, so why would you listen to me?
I'm good on the Bitcoin pairs, but the USD pair is a little bit more difficult. So that's why I've been talking so much about this strength and weakness kind of strategies, because I mean, it's easy for me to pick which coin is strong and which coin is weak. It's a little bit harder to kind of guess where the market in general is going to go. But as long as you're correct on, okay, is this coin going to out or underperform, it's another way to make money. So, yeah.
There's a question from Mush. I think it's a good one to end on. Who says, what would you say to someone who missed the whole Bitcoin dollar rally? I mean, kind of depends on your specific circumstance and stuff, but generally I'll just say the market's going to be here tomorrow, and the day after that, and the week after that, unless something goes terribly wrong. If anything, I know the price appreciation is the main kind of leading narrative and the thing to pay the most attention to. But for me, one of the coolest things about this whole rally and the nature of this rally is that the chances of kind of Bitcoin disappearing are way lower than they were in, say, 2017. And there's a really good chance now that this market is here to stay and here to stick around. That doesn't mean it's going to be easier to trade, right, by any means. But for me, this rally is kind of validation that it's not going to go to zero. It's going to be here, and it's going to be here for a while. So if you missed it, it's not like the 2017 thing where you look at it and you think, oh my God, I can't believe that's it and now it's over. I just think it's worth, deep breath. Remember that the market's going to be there kind of for a while now, I think, and make the most of the future going forward, as opposed to kicking yourself for the past, which you can do absolutely nothing about at the moment. I don't know. It's a bit I
can only agree with
it's
that.
A bit cliched, like the market's going to be here tomorrow, but that's really all it is. Like, you missed the rally. You can't go back in time, right? And revenge trading it now is probably just generally revenge trading is pretty stupid. So learn and plan ahead, because it looks like we're not going anywhere for the near future, and that's a position of higher certainty than we were in 2017, right? Or like after 2017.
Yeah, I mean, for me, it kind of like when you're in that situation, right? It really sucks seeing it go up. What you kind of have to think about is, okay, am I a trader? Am I gonna trade this market, or am I an investor, right? And it's something that I've maintained throughout the years. If you're an investor, I mean, stop looking at the price so much, because if you're thinking Bitcoin goes to 100K, then it doesn't really make much sense to kind of just gamble everything on making a little bit more, because you're making a shitload if it goes to where you think it's gonna go, right? So as an investor, I don't think you should be price should matter too much to you. But as a trader, it's obviously very different, right? You don't want to be just blindly buying because you're getting FOMO. Like buying out of FOMO as an investor is, I think, much better than just buying out of FOMO as a trader, because as a trader you're eventually closing again, right? And as an investor you don't necessarily have to. So kind of think about what you really want to do in the market. Do you want to trade it? Do you want to invest in it? Maybe both. Then you can kind of just pick a spot where you think it's likely to go, a nice support or something, and then get something for your investment portfolio, and then see if you find a better trade elsewhere. But yeah, that is an important distinction to make, I think. And I mean, if you're just here to kind of invest in it because you think it's got future and it's going to go up, then don't get held back by whatever price. I mean, and you can just do whatever you want with it.
Well said. Well said. Well, Doug, that went by pretty quickly, but it always does. Thank you to the audience for hanging out with us. We always love your company on a Friday. Hopefully it was enjoyable and you've got productive, aka staring at charts, weekends planned ahead. A thank you to Bybit for sponsoring Technical Roundup. Their links, including the Christmas themed competition, can be found in the description below. 96 likes. If we get that to 100 before clicking off, we'd be incredibly grateful. On my side of things, you've got me on Monday for the usual session, and also over this weekend I'm working on the market structure educational video for my channel, but it's being a total pain in the butthole at the moment. There's just a lot of content, so look out for all of that. You'll see us on Twitter and other places. Duck, thanks for hanging out. We'll try to get a guest on, of course, for next week if there's demand, but that's all. Have a good weekend.
Good night. Bye-bye.